FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And in this video guys, what we're going to do is I'm going to walk you through some live trades that I took last week. And we're going to go through them and I'm going to explain to you the process of what I was thinking at the time. I'm going to show you the trades as they're happening and why I took the trades. And we're going to break down the two trades that I took on this day during the New York session specifically. And we'll get into it, and hopefully you can get a lot of value from the way that I trade and why I took the trades, and you can see whether or not I ended up winning or losing the trades. But without further ado, guys, let's get this week started. All right, guys, so let's talk about the first setup, which was EURUSD. And let's talk about why, for me, it was a good setup. So the trade itself was basically this right here. So this right here was a trade setup, okay? I took it basically as a continuation trade. And it was a 2-to-1 risk reward ratio, 15 pip stop loss, 30 pip take profit, okay? I couldn't use the EMAs for obvious reasons. So I typically just go 30 pips. If I get more than that, great. But if I don't, that's okay. I'm only aiming to get 2-to-1 risk reward ratio on it, so that's my goal. So let's talk about what are the factors that for me allowed me to get into this trade, or why I saw this as an opportunity. Okay, so let's talk about the first thing is going into the US session, and let's just go back one candle here because this is where I was at when I was thinking about getting into this trade. So what are the factors that I look at right off the bat? So if I just go to the 1 hour time frame real quick, and I take a look at where I'm at, right? If I'm coming off of, here's a peak formation low, here's a peak formation high, this is 3 times ADR here, and then I go down from here to here, and this is only about 192 pips. So I know that there is no way that this is obviously 3 times ADR. So with that being said, knowing that this is not 3 times ADR, generally speaking, you would be thinking that this would be going down. But as you can see, price action reversed and actually broke this structure right here. So price action broke past that structure there. So this is a good indication for me that this price action where it's at now is actually a reset, that this potentially is a reset. So that's why I had the bias of looking for buys instead of sells. Because normally, you know, you're coming off of peak formation high up here, and you're only 192 pips down. This particular pair goes over 300 pips easy on a three times ADR. So you'd obviously be looking for sells, but price action told me something different, right? If price action was like this moving sideways, then yes, I would still be looking for sells, and I would have the 200 and the 50 here still, you know, above me to help push price down, act as a form of resistance, right? But we didn't get that. We had price literally go straight through and break this structure here. So as soon as it breaks the structure here, it's no longer, you're no longer building out level 1, right? So now I'm more biased towards looking for buys and trying to see, first of all, if we can get at least back up to here to see if we can get something like this to be made. And then this would basically be an unconfirmed reset, okay? Secondly, if it doesn't do that, then obviously you're looking for price action to go 3 times ADR. In this pair, I believe it's well over like 300 some odd pips. So it's somewhere up here, 3 times ADR. Okay. If we look actually at the higher time frame, if we go up to, I believe the 4 hour time frame, 3 times ADR ends up being from the reset here. It ends up being somewhere up here. Okay. And if we go back down, you can see the last major structure on a 4 hour time frame was here. So if we just mark this off real quick, just so you can get some reference. So here and right around here, so that area. So that's basically around that area is 3 times ADR. Okay, so if I go back down to the 15-minute time frame, the entry was this right here after this candle. So we have essentially, I was waiting to see if we get any kind of retracement or a pullback on the next candle, because obviously that would give you a way better entry. So if I would have gotten a pullback, that would have been even a much better and tighter entry. But the next candle did not produce that, so we just went in and did it. Okay, so that's the first thing. Secondly is, what do we do in London, right? In London, you could clearly see we had a type 2 trade out of the edge. And so what I mean by that is basically you had price action where it bounced here and then gave you a second bounce here on a railroad track, right? So there's your W there, pinning to the 200. Okay, so that was the trade setup or the pattern essentially during the London session. So now coming into the US session, what are the alternatives? Essentially for me, I'm only looking for really one of two things. Either I'm looking for a continuation trade or a reversal. Okay, and so a lot of that is solely based on, you know, whether I can identify peak formation low and all that stuff, which is what I did here before. So that was the entry, a continuation trade bouncing off the 50, which is a good confirmation. So I have a bounce off the 50. That's one confirmation. Two is a bounce off the 50 on the TDI. Again, good confirmation as well. And we just had a huge, nice move essentially from London as a type 2 trade out of the edge. Okay. So my bias was a buy. It was never a sell to begin with. All right, so that was essentially why I took the trade. I had the confirmations that I wanted to have. So rejection off the 50, basically the middle of the range, 50 off the TDI, and I knew my directional bias based solely off of looking at peak formations and the structure of price action, knowing that this structure was broken here, and I'm not looking for any sells any further. I'm looking more for a potential reset. All right. All right, guys. So let's take a look at the second setup, and that was EURCAD again during the U.S. session. So on EURCAD here, the setup was essentially a type 1 buy, going all the way back up to at least test these previous day's highs, and that gave me at least a 2-to-1 risk to reward ratio. The entry itself was essentially, as you'll see in the video, on this pullback candle here. And the reason I got in on this particular trade is essentially you could see we had a type 3 during London, very nice type 3 actually, and we came down to the 200 and the 800, and you can see price action bouncing off the 200. Okay, and you could see the pattern essentially of what market makers were trying to do here, in the sense of they didn't want to go any lower, right? They didn't want to go any lower than this, these points. And you could see that via the price action here of the pins to the 200, came down again, and you can see it literally came right back down to that same area. And then we ended up getting this nice bullish engulfing candle here. For me, when I look at this, is like I was telling you guys on the other trade, is I only look for either reversals or continuation trades. So for this one here, this big engulfing candle essentially took out almost the entire London session trading, as you can see. So this one candle took out all of this, all of these candles here, this entire block here of candles of trading was essentially taken out by one candle. Okay, so to me, that signals that they're no longer want to be down here at all, right? So they want to shift the market up. So I typically, because of the way that this candle was or how big the candle is, obviously it makes it pretty hard, to get a decent risk to reward ratio on it. Still not too bad, 16 pips, but I prefer to get a pullback I always try to get a pullback on it so I get a better entry. And essentially that was the pullback here. So that's where I got in, and the trade setup was basically this: 2-to-1 going back up to the highs here. Okay, that was the plan. And as you see this play out in the charts that you'll see here in a second, price action basically did not want to go. It's basically like stalled, right? So, and I'll show you in a second here, but my bias was basically a buy because of where price action was. We had a type 3 coming down. It was pinning to the 200, and also we had the 800 here. On the TDI, we were already here at the very bottom. Okay, so if we were here in the middle, it'd be a different story, right? But we were here all the way at the bottom, so very likelihood to go back up. And I was thinking that this is going to be a potentially a trending cycle, because we were creating from the beginning of the week higher highs, higher lows, higher highs, higher lows. So I was thinking I'm going to get this trade off of the higher low, and then push it forward. As far as the bigger picture goes, you can see that we're coming off of a peak formation here, and we've just been moving sideways for like 4 weeks almost. So because of that, I'm still reading this whole area here as like one level, right? Because we've only moved about 200 pips or so. So I'm still reading this as still a huge, just a bigger level on the higher time frame. You can see here, it's just moving straight sideways. So I'm thinking about going all the way back up to the top is the idea, right? So that's why I took the trade. That was my bias. So interesting thing that I'm just going to play for you real quick, and I'll show you on the charts in the actual trade, was that this trade setup ended up, as I play this out, you'll see that it ended up going back down again, and they come back and hit it again, right? And so a lot of people may ask, hey, well, how come you didn't get out of the trade? Well, I have a 6 candle rule, right? So if I'm not in huge profit after 6 candles, I generally take out, get out of the trade or look to break even on the trade. So if you look here, we had, 1, 2, 3, 4, 5, 6 candles, 6 candles here, and I was obviously not in profit. So I started thinking maybe I should get out of this trade, and just take the small loss and call it a day. At that point, it would have been 4 pip loss. I mean, it's really small. Didn't even matter, right? So then I started thinking, well, here's the thing. We're kind of in this scenario where, and I didn't notice this until this started to play out, where I completely forgot the fact that I just didn't take into account that we're basically trading in a range between the 50 and the 800, right? So typically price likes to move sideways. Although we do expect a breakout to happen, we just don't know when that breakout would essentially happen, right? So for me, the key part of this particular trade setup, and I ended up deciding to keep the trade going because just the risk was super small anyways. But I noticed that they were not taking out the low. The low was never taken out. Okay, so as long as the low is not taken out, all that means to me is that they're still working this area. They don't have the number of contracts that they need in order to make the move that they want to make, right? Which is to go higher. And so because they don't have the needed contracts yet, they need to convince more retail traders to sell. So because of that fact, I ended up staying into the trade, and you can see what ends up happening here. They pin the bottom, but they never actually take out the high or the low at the point, right? So for that fact, I stayed into the trade, and I didn't get out. And so here's how essentially the trade ended up playing out, which was, you can see that I just slowly, and I mean, this was slow. eventually it went up to about 25 pips or so. I actually got out of the trade early. I got out of the trade after about 15 pips of profit. I didn't want to hold the trade to the next day or anything like that because I didn't know what was going to happen. And I saw that they were testing the highs here of Tuesday. So I didn't know if they were if this was going to turn into a market maker cycle where they would test the highs here and then have a midweek reversal on Thursday. So I didn't want to take the chance. I'd just rather get out of the trade. I'm in profit 15 pips and call it a day. So that's what ended up happening on this particular trade setup. And so let me go ahead and show you the video on that now so you can take a look at it, how it ended up playing out in real time during the trade. All right, guys, so I hope that you enjoyed this video. I hope that it was informative in showing you real examples of real trades that I took during the New York session, what the mindset was, what I was thinking at the time, so you can get a better understanding as to how I take trades. So if you like this kind of content, if you like to see the explanations and the trades taking place and stuff like that, like this video, guys. Let me know in the comments below, and I'll make some more videos like this so you guys can get more of this content. All right, appreciate the support, guys, and enjoy the rest of your trading week.